Today in crypto. Chainalysis, a blockchain data analytics and security platform, have announced its acquisition of cybercrime investigative company Excygent, bolstering the former firm's push to combat ransomware attacks. Known to aid regulatory agencies and other interested parties in tracking cybercriminals, Excygent will boost Chainalysis's digital currency transaction monitoring efforts. The provisions of tracking tools to peek into the anonymity of transactions through blockchain networks have become central to the unconditional embrace of cryptocurrencies by most regulatory bodies worldwide. It is drawing on the excuse of digital currencies being used for illicit activities such as ransom payment during cyber data thefts and hacks, amongst others. With the tools Chainalysis is building, more government agencies will find more comfort in rolling out futuristic regulations for the nascent industry. Cybercrime like ransomware is one of the biggest barriers to building trust in cryptocurrency, said Michael Groninger, co-founder and CEO, Chainalysis. The expertise brought by the Excygent team directly aligns with our mission to leverage the transparency of blockchains to weed out bad actors from the ecosystem and ultimately promote more financial freedom with less risk. The duo of Chainalysis and Excygent have worked together in the past with government agencies to support the most significant virtual currency investigations in recent history. One of these historic endeavors was in resolving the hacking against Twitter that saw the accounts of over 130 prominent people, including the U.S. President Joe Biden, hacked last year. Based on this history, integrating both companies' technology will not be an arduous task. The Excygent team has been leveraging Chainalysis technology and working alongside their team to tackle some of the most significant investigations into cryptocurrency crime in recent years, said Aaron Bice, Excygent, LLC. If you're committed to creating a safer ecosystem for cryptocurrency participants, Chainalysis is the team to be. We are thrilled to join the world's leading blockchain data platform and to continue to grow their services and technology offering to government agencies. Unlike other Layer 2 blockchain solutions, Aventus is enterprise-grade, having an agreement to onboard over 58 million transactions from a variety of clients across various sectors. The Aventus staking program is already 80% full and has begun processing the first of at least 58 million transactions. The publicly stated goal of the company is to reach 1 billion Layer 2 transactions in the next couple of years. Stakers receive their share of transaction fees as part of the network's proof-of-stake transaction validation model. The staking program will close once full. Here's everything you need to know about the Aventus staking program and how you can get in before it closes. What began as a blockchain-based ticketing solution to combat ticket fraud has expanded to become a customizable Layer 2 blockchain network that lets businesses and dApps built on Ethereum and other chains, at scale, to process transactions at 100x the speed and 1% of the cost. Everyone knows that Ethereum fees are at an all-time high and scalability is limited to just 13 transactions per second. That's not enough. Aventus Network is a Layer 2 solution that brings the scale and privacy of a permission blockchain with the security and interoperability of public blockchains, with none of the drawbacks of either. All current and future transactions will flow through the main net also. You can find full transparency of all Aventus network traffic and fees at explorer.aventus.io. What's more, since many Ethereum competitors exist, as well as other private, permissioned networks, Aventus builds using Substrate, which makes it simple to become a parachain and benefit from full Polkadot interoperability, enabling enterprise Layer 2 scale across chains. Over the course of 2021, Aventus has already built a fork of Polkadot's Substrate to solve real-world issues, building strong relationships with a range of ambitious, high-growth businesses, from ticketing behemoth Live Nation France as reported by Bloomberg and video game content platforms, like Fruit Lab, to credit card cashback programs, like Cashback. Now, significant updates to Aventus network platform architecture will facilitate exciting new NFT partnerships that will reshape and reignite the market. Creators can now mint NFTs on the Aventus network mainnet for a fraction of the cost of any other blockchain network. Aventus NFTs are fully compatible with Ethereum NFTs, and therefore can be moved seamlessly from one blockchain to another. What's more, unlike other NFT blockchains, The NFT Manager palette on the Aventus blockchain is designed to support royalties and is directly built into the blockchain. This ensures that creators who should receive royalties have a provable claim via an immutable ledger on their royalties. This major upgrade for NFTs broadens the network's appeal as a full-service blockchain solution for any sector, any application, and any innovation, massively increasing the transaction throughput potential of the network with associated fees for stakers. Aventus Network is the brainchild of co-founder and CEO Alan Vay, a Forbes 30 Under 30 winner for his work as the co-founder and CEO of the Aventus Network. Before moving into blockchain, Alan worked at Deloitte in the entrepreneurial business department and macro hedge fund Brevin Howard. He completed a master's degree in artificial intelligence at Imperial College London. His master's thesis was on blockchain technology, during which he co-founded Aventus. Supporting Alan is an experienced leadership and advisory team. Notably, one key advisor is Danny Masters, executive chairman of CoinShares, a company that has accumulated over $3 billion in assets in XBT provider-listed products while having attracted over 40,000 clients. Using a proof-of-stake node validator model, the Aventus network pays validators their share of fees from every transaction processed on the node to which they stake their $A.V.T. There is a total maximum supply of just 10 meters AVT with a market cap of less than $5 million. As you can see, the network relies on AVT holders as validators who process transactions in return for a fee. The Aventus network will launch with 10 nodes, each with an equal probability of selection to process transactions, i.e. 10% probability. Each node will earn fees associated with the processed transactions at an average of $0.01 per transaction. And each node will have a total stake of 250,000 AVT. Validator transaction fee rewards are paid in proportion to the amount of AVT a validator associates with a node. For example, if a holder owns 25,000 of a node's 250,000 AVT, they will receive 10% of all transaction fee rewards from that node. According to the active Aventus Telegram member Blake, the staking earning rate is better than crypto lending platforms like Nexo. In addition, the staking rewards earned are not diluting your original holdings as Aventus has a fixed supply. A lot of staking rewards with other projects may offer higher earning rates, but in reality, you are not really earning anything as those staking rewards are coming from minting more tokens and adding to the total token supply, commented Blake. Validators will be able to withdraw their proportional share of transaction fees associated with their nodes on a monthly basis. Validators will be able to deposit any amount of AVT to any of the 10 nodes using the Ethereum smart contract provided. The smart contracts have undergone a security audit by an independent third party. The validator registration program is currently 80% full and will close immediately at 100%. Register to stake now. You can find a step-by-step guide on how to stake at https://medium.com/aventus/ the step-by-step guide to the Aventus Validator Staking Program E3CCF4B47CAT. Gary Gensler, head of the United States Securities and Exchange Commission, has confirmed that his agency does not have the authority or intention to ban cryptocurrency. While responding to questions during a House Committee on Financial Services hearing on Tuesday, Gensler emphasized that prohibiting crypto does not fall within the SEC's mandate, stating, "That would be up to Congress." Continue reading on Cointelegraph. The Cosmos cross-chain network has been growing steadily along with the projects that run on top of it, and it's just reached a milestone in terms of activity. The Inter-Blockchain Communication Protocol, IBC, which is the backbone of the Cosmos ecosystem, has seen a surge in activity over the past month, with more than 1 million transfers logged. Continue reading on Cointelegraph. Bitcoin has increased in value by 6.5 billion% since it was first priced in USD. Bitcoin miners are accumulating Bitcoin instead of selling it for profit. Over $90 million of crypto fund investments represents new money. Bitcoin passed the new psychological threshold of $50,000. Confidence in the market is beginning to improve after Bitcoin retraced by more than 50% since its previous all-time high of $64,000. Chinese market influence and hegemony are retracing after making Bitcoin and crypto transactions illegal. Bitcoin's market sentiment flipped to bullish after a month of negative appearances, reclaiming the $50,000 mark on October 5. Bulls before bears. As the leading cryptocurrency by market capitalization, Bitcoin has a tendency to drop off and show an unexpected side in the market. However, Bitcoin's uprise was catalyzed mostly by positive reinforcements from U.S. regulatory bodies, including the SEC. Although the SEC's chairman, Gary Gensler, referred to crypto as a Wild West, drawing comparisons to the early days of capitalism, his latest comments rippled the market. Gensler said in a Washington Post interview that the U.S. does not intend to ban crypto in a similar way to how China chose to address the notion of decentralization. In turn, the SEC notes that tokens do meet several criteria of being investment contracts or bills, and the SEC is seeking to bring crypto within the investor protection remit. Tyler Durden noted that the SEC's more positive attitude towards crypto helped funnel more positive momentum for Bitcoin. In addition, the current reverberations from the U.S. government are in antithesis with China, as it helps to stabilize Bitcoin's volatility and increase investor trust. On the flip side, the IMF doesn't consider Bitcoin to be a form of payment or digital money. Bitcoin can create both positive and negative outcomes due to its heightened volatility. Market confidence can be hindered by negative financial outcomes such as the Evergrande financial debacle. Investors gain momentum. The crypto market registered record outflows during June and July as investors sought safer financial havens, repurposing Bitcoin as a hedge against inflation. Will Clemente noted that miners have stopped selling BTC after a few weeks of selling and started accumulating again. Additionally, the Riot blockchain, Nasdaq Riot, mined a total of 406 BTC and sold none. Pomp highlights that economic incentives drive further decentralization, but that doesn't always equate to BTC selling. CoinShares data indicates that crypto inflows have been positive for over 7 weeks, with the last week of September registering a record of $90 million in inflows. According to the same report, Bitcoin inflows amount to $68.7 million, reflecting the current market increase and perceived positivity. What's more, the U.S. bank announced it will be launching a custody service for a fund manager which seeks to invest in digital gold. The service will aid investors in securing their private keys and assets for digital assets, including Bitcoin, Bitcoin Cash, and Litecoin, denoting that institutional interest is expected to increase as Bitcoin pushes on into a new bullish cycle. Bitcoin's credibility is a balance between group belief and government narratives. Bitcoin's value has grown by 6.9 billion% since it was first paired with the USD in 2009 and continues to generate financial headlines despite negative economic downturns. Crypto Twitter, NYSE, TWTR, and Bitcoin maximalists have always been confident in Bitcoin's status. Bitcoin itself gains more market exposure with each new financial epoch and wave of retail interest, even seeing integration as a legal, financial instrument in El Salvador. Why you should care. Bitcoin's volatility is a trademark in the new financial market which will not be going anywhere. However, investors can gain a better understanding of the market by looking at the market sentiment as well as institutional interest, primarily capital inflows and outflows, to predict new market movements. Email newsletter. Join to get the flip side of crypto. Upgrade your inbox and get our daily coin editors picks 1x a week delivered straight to your inbox. Contact Form 7. You can always unsubscribe with just one click. Continue reading on Daily Coin. Hit the like button and subscribe to the channel.